So let's dive into a really interesting paradox in the tech world. We're going to unpack how a company like Micron Technology can have an absolutely incredible quarter and still see its stock price fall.
Okay, so first up, let's talk numbers. Because Micron's recent performance, it's basically the poster child for what everyone's calling the AI supercycle. You know, this massive, long-term boom fueled by all the money pouring into artificial intelligence. And that's creating just insane demand.
All right, take a look at this table. It really shows you the sheer scale of what's happening at Micron. I mean, when you look at the Q2 2026 numbers compared to the past, you see this crazy acceleration across the board: revenue, margins, cash flow, you name it. And this isn't just a little bit better than last year. No, this is a fundamental shift in their business, and it's wildly profitable, all thanks to AI.
So get this, the revenue hit almost 24 times billion dollars. That's nearly triple what it was this time last year. Just think about that for a second. And where is that coming from? Well, it's pretty much all thanks to the white-hot demand for the special memory chips that are the backbone of all this AI infrastructure.
And how about their gross margin? A record 75%. That's a huge number. Now, why does that matter so much? Because it screams pricing power. With everyone scrambling for these AI chips and supply being super tight, Micron can basically name its price, and that goes straight to the bottom line.
And, that profitability, it just cascaded right down to the bottom line. Their earnings per share hit $12.20. That absolutely crushed Wall Street's expectations. We're talking by more than 40%. By any measure, this was a total blowout quarter.
Okay, so this is where things get weird. This is the big paradox we're talking about. The results were phenomenal, right? A historic blowout quarter. So why on earth did the stock price actually fall? What was going on here?
Well, the answer wasn't buried in some footnote in their earnings report. Nope. It was plastered all over the global headlines. Literally at the same time they were dropping these amazing numbers, a completely separate event was sending these massive shockwaves through the entire market.
This timeline really lays it all out. You can see this collision of two major stories. So, back in late February, a military conflict kicks off between the US and Iran. Fast forward a few weeks to March 18th, and boom, Micron drops its record-breaking earnings. For a moment, the stock even hits an all-time high. But as the reality of this growing global crisis started to sink in, the stock started to slide.
So what happened was, this conflict triggered what the market calls a risk-off mood. Basically, investors everywhere got spooked by all the uncertainty. And when that happens, they dump what they see as risky stuff, like high-flying tech stocks, and run for cover in safer things like bonds or gold. So, it didn't matter how good Micron's numbers were, it got caught in this huge market downdraft.
Okay, so you have these massive external headwinds swirling around. But let's look back inside the company for a minute. What were the strengths, the tech and operations, that allowed them to post that record quarter to begin with? Let's peek inside the Silicon Fortress.
From an operations standpoint, Micron was making some really smart moves. They locked in their first ever 5-year agreement with a key customer. That means predictable revenue, which is huge. Plus, they smartly shifted their focus to making the most profitable stuff for data centers. And they even bought a new facility in Taiwan to ramp up production even faster. Just smart, solid moves.
And then there's the tech side. This is where they have a huge advantage. What you're looking at here is their roadmap for what's called high bandwidth memory, or HBM. Think of it as a super-fast data highway for AI systems. It's absolutely essential. And look, you can see how their new tech lines up perfectly with the next-gen platforms from partners like Nvidia. This puts them right at the center of the whole AI universe.
But of course, it wasn't all sunshine and rainbows. The earnings call also brought some pretty significant challenges and risks to light. You could start to see a few cracks in the fortress walls.
Yeah, if you're an investor, a few things probably raised your eyebrows. First, they're planning to spend over $25 billion on new equipment and factories. That's a massive bet. On top of that, their huge new factory in New York, it's already facing big delays. And here's the kicker. Even with everything they're making, they can't keep up with demand. They're only fulfilling maybe half to two-thirds of some orders. That's a problem because it could let competitors get a foot in the door.
And this is where that geopolitical storm cloud comes right back into the picture and becomes a direct threat to their actual manufacturing. This table lays it out brilliantly. You see, a lot of the key materials they need, like helium, which you have to have for cooling and has no real substitute, it comes from that region. A prolonged conflict could choke off the supply of these critical materials and literally grind chip production to a halt.
So, okay, let's pull all this together.
You've got these unbelievable profits on one side, and these really serious global risks on the other. So, what does this mean for an investor trying to figure out what's next?
Well, in the short term, you've got this tug-of-war between amazing fundamentals and genuine fear. The company's financial engine is still roaring. Their guidance for next quarter is great, but the stock price is probably going to be all over the place until there's some clarity on the whole geopolitical situation. Long-term, though, the big bet is still on that AI supercycle. If that turn holds up, and if Micron can navigate this material crunch and keep its tech lead, then its current price could look incredibly cheap a few years from now.
So, if you're keeping tabs on Micron, here are the 5 things you absolutely have to watch. First, obviously, the situation in the Strait of Hormuz. Second, you want to look for any industry chatter about helium supplies and potential shortages. Third, watch how well they actually spend that massive capital budget. Is it turning into more revenue? Fourth, keep an eye on their HBM roadmap and what their big partners are saying. And finally, what's happening with the CHIPS Act funding for their U.S. factories?
At the end of the day, it really all comes down to one big question. Micron has done an incredible job building this silicon fortress. They've made themselves a leader in one of the most important industries in the world. But right now, that fortress is being tested by a geopolitical storm that is completely outside of its control. And how it holds up over the next few months, well, that's going to be absolutely fascinating to watch.